I think we can start. Thank you guys for joining us. Thank you for the inspiring lectures at the start. And I would like to start with the same topic Dr. Kim started with. It's the trade wars. Let's start sharp. What are your expectations for following weeks, months, maybe years? And well, where do you see this development going, and which regions or industries do you feel like are the most threatened by this, let's say, trade war called already? Whoever feels like starting, I'll appreciate it. I don't have to call you on hates for the answers, as it would remind me of my time at that school. I don't know. In general, trade wars. What are your expected developments in next couple weeks or months?
I can start, actually. So the idea, we can really have to distinguish between the actually genuine trade war and then signaling. With politicians, it's more around signaling impact. So they want to get something from negotiation, so they throw it. Trump is using that kind of negotiation tactic a lot, actually. The management style in negotiation. So we have to divide, actually, is Trump is doing really this state threat for the genuine purpose or just for getting something on the negotiation. So that side, I don't know what is the actually with the industry can be the most threatening one, but it's, as I said, it's challenging and then the opportunity at the same time. He's growing energy sector heavily. He's growing the ESG sector heavily, and then he's been throwing all the sector. He's also the threat going to the shipbuilding industry as well. But all those can be the opportunity at the same time. How you are doing negotiation on the opposite side can be. If you see the why Japan didn't get any tariff war. They don't visit Japan actually. Why? And Japan didn't get it. So we can look from the Japanese government how they did actually.
Yeah, well, maybe let's follow up with that. The fiscal system in the United States is under pressure. Their tempo of growth of debt is almost 6% of GDP, which is an extremely high number. Trump doesn't want to raise taxes. So there are the two most discussed options on how to, let's say, cut the tempo of the growth of debt is by reducing the costs of the government, and the second one is actually the tariff way. We could talk about in which way he should go. We could give him suggestions, but what it looks like is he's not gonna ask us anyway, and he'll push for those tariffs because he needs to fill his federal budget. So what's next? We're talking about Mexico, Canada. Lot has been said about China, but who's next? Which sectors are next? And we've heard that it's not only costs, not only challenges, but also opportunities. So which opportunities do you see in Trump's trade policies?
Good afternoon, ladies and gentlemen. Thank you, Pavel, for your question. Of course, it's very difficult now to say what Mr. Trump would do, but certainly there are a number of tariffs in the pipeline still, because we have said that we planned so-called reciprocal tariffs, meaning that he's eager to raise taxes, because tariff is kind of tax, to the same extent how or to which other countries are taxing already now goods from United States. So, for example, cars, passenger cars, normal passenger cars from the US are taxed in European Union by the tariff of 10%, whereas in the US, passenger cars, not trucks, are taxed only by 2.5%. So the tax or tariff on cars is 4 times lower in United States than vice versa. So this is first set of new tariffs Mr. Trump has been speaking about or been talking about, and there are of course the major threat for us as European Union or Czech Republic as a country that is still very dependent on automotive. His promise to really introduce tariffs 25% high, and that's because according to him, according to Mr. Trump, it's very strong opinion or very strong remark even on his standards, and this remark was done by him I think last week, and he has said that European Union was established only to screw up United States. It's only reason for European Union to exit, which is very tough statement, as I said, and that's why I think that really the tariffs on European Union will be quite high and really may be universal, so applied on every stuff that's goes from the European Union to the United States, and that's a major threat for Czech economy as well, of course. Not because there is a direct trend, of course, because we have direct trade with the United States, but for example, in the automotive sector, what's more threatening for us as Czech economy is an indirect threat, because last year Czech Republic exported only cars for about 60 million crowns to the United States, so almost nothing. But for us, much more harmful would be an indirect effect, meaning that, for example, our tariffs on cars going to the United States from Germany would be very harmful for German economy, and this is very important for us because we are a major subcontractor of many German automotive companies, or our companies are major subcontractors of these German companies. So it would be really bad for us. And Oxford Economic study from last month has said that Czech economy would be harmed by most compared to other countries in European Union by the tariffs of Mr. Trump. So that's another set of tariffs. So reciprocal tariffs, universal tariffs on European Union in the same way as those introduced on Mexico, Canada, and China. And finally, there is another third set of tariffs, and these are tariffs similar to tariffs that were introduced again last month. It was on aluminium or from steel, and now Mr. Trump has been talking about tariffs on lumber and copper. So we will see what happens next. My last remark is that given Mr. Trump is willing apparently to somehow soften his stance, because now he's promised to delay tariffs on I guess cars, on automotive sector in Canada and Mexico, probably or likely because he has realized that it's very harmful for American economy itself, as many economists had warned before So for us, it's an FAQ, but maybe for Mr. John, it is.
Thank you, Lukáš. And one last question. I hope everybody forgives me for asking about the Czech economy, but Mr. Skořepa, how do you view situation here? What are your expected developments specifically for the Czech Republic or CE region?
Well, actually, I was going to make a few remarks on what you said before on American fiscal policy, because I think, first of all, the tariffs, unless they are really very, very dramatic, and in that case, I think it would hurt the American economy to an extent that I think Trump would never really go that far. But any realistic extent of tariffs will not really solve the fiscal problems of the US, because volume-wise, it's simply not enough. So that's, I think, it may help amidst them, but it will be peanuts compared to the overall deficit. Another point is that you mentioned cost of government and tariffs, and I think the third thing, the new one, as far as I can follow the discussion, is that he's actually planning to cut some of the subsidies for chip makers, for example, which I think is very interesting, because they are to expect him to really try to build, on the contrary, to build domestic basis for production of such an important thing as chips. So that could help as well, probably also not very dramatically. But the biggest point here is, I think that the US fiscal problems, I think, can continue for quite some time. It's a very liquid market, the market for US debt. And so I think the risk of a sudden, shock, of a sudden run on US bonds, I think is very unlikely. In fact, the more likely scenario is a slow descent or increase in terms of yields, let's say, and also, let's say, increase in inflation, that therefore increase in Fed interest rates. But all these things will take some time. Trump himself starts using this rhetoric. It will hurt now a little bit. I think he talked about little disturbance in the Congress speech that he had. There will be little disturbance at the beginning, but then everything will be okay and America will be great again. So I think he's ready to wait some time for the fruit. And in fact, I think the people around him will pressure him much more to be careful, because he's at the end of his career, right? He has, unless there is a big change in the Constitution, he can be really elected once more. So I think the guy here really wants to make sure that the steps of this administration do not go too far, advanced, because clearly we saw it on Friday during this crazy scene with Zelensky, that I think Vance really wants to prove to everybody around that he is the good replacement in the future for Trump. So Trump himself, whatever he comes with, I think the people around him will press him to not to go too far. And as for Czech economy, I think it's very difficult to say, given that we don't really know what exactly will happen. Lukáš already talked about the reciprocal tariffs, especially in the area of cars. That's true. On the other hand, the difference is 7.5 percentage points, which, of course, if you increase the price of a car by this amount, it can make sound difference, but I don't think it's a huge difference. Much bigger impact, I guess, is when there is a tariff between Mexico and US, because many parts of the cars go back and forth several times, so the tariff burden builds up. So I'm really very careful to give any specific estimates. We have a nice estimate from the Ministry of Finance, which I think was done in a very careful way, which says that if there is a 10% additional tariff on what is being exported to the US from Europe, and vice versa, 10% on the other side, the impact will be roughly half percentage point for GDP. I think that's a nice starting point where everybody can make their own guesses if things are a little bit better, different. But anyway, there is a lot of uncertainty, because we never know. And the economy, the global economy, we see with the counter-Russian the measures against Russia, where the private business always is able to find ways go around to some extent.
Thank you. Mr. Kim Zietlow would like to continue.
Yeah, just I want to make two quick remarks on what's been discussed here. One thing, just to put things a little bit into different perspective here. And you said hopefully there are people around Trump that pressure him into the right direction. Honestly, I'm not sure if this group actually exists and if they actually reach him. Let's face it, okay. So what I think is that he listens carefully to his constituents. To the voters, the guys on the ground, what happens on social media. So I would like to wait a few more days to see how that would unfold. Because if the mood, in the population, especially in the red states, changes, that can put a real pressure on him, and we know how quickly he changes his mind. So, that's, let's say, another factor, that plays a big role here. Of course, economic reasoning, and that, policy analysis should be factored in, and let's say sane politicians would take care of that. But the U.S. is in a different situation right now. The second thing is about the reaction of companies, especially foreign companies. You already talked about car makers from Mexico and the United States. Because actually what's going to happen is larger companies that have the means to finance investments in the United States will think about two things: either creating their own production capacities in the United States, however that would take time, but they can do that, or they will engage in M&A activities in order to have some footprint inside the United States. In terms of car makers, of course, that can happen, if the final car is produced in the United States. But again, that doesn't solve the issue about the supply chain, because a lot of components will still come from outside the United States. So that's another thing that could happen. On the other hand side, and that also relates, I think, a lot to Czech companies and other, SMEs around the world, they are not in that privileged position, to spend a lot of capital on these activities. Is just to look around, just to find other trade partners, and just explore other markets. That's probably the cheapest and the fastest strategy that's possible.
I also adding one thing, actually. I agree with Michal, actually. Tariff will not solve the economic problem with US, and the tariff is not the actual end of goal for the Trump. Trump using tariff as a tool or weapon to fixing the trade deficit of US. So trade deficit is goal, actually. If you see the trade deficit in the US, the EU, China, Canada, and the Mexico representing the 66%, actually, 2/3. So need to fix with those four, actually, followed by UK, Japan, and South Korea. But he said he will not give tariff to UK and Japan. And if you're the car industry, which car is selling the most in the US? Japan's Toyota, not Japan. But when they visiting to the Japan, what happened? Japan didn't get any tariff from the car industry. Why? Because Japan promised to buy the energy anti-defense weapon from the US, which is the biggest industry supporting the Republican Party all the time. Energy and the defense industry, right? Japan smartly played, and they give what he wanted. So actually, with smartly play, trade deficit, tariff can be avoided. What we love from Japan.
That's actually quite a good remark, as it's being discussed already, that Europe could be buying more energy, commodities, or maybe a defense mechanisms from the US, which could improve the trade deficit of the US against the European Union. But on the other hand, and to answer my question, the current situation is that the gas price in Europe is almost 3 times higher than in the United States, which make it kind of complicated to make an economy running on this, let's say, behalf. I never, maybe it's not the smartest question, but I know that plenty people wonder about why the tariffs are, or about metals, cars, I don't know, some other commodities. Is there any chance or any risk of those tariffs actually targeting technology or AI, generative AI, or companies like this, or is is this not on the table?
I think that actually the US would like to do something for the China on the generative AI side. Actually, how do I type because they lucky the selling the semiconductor sector, right? And they direct you to the Netherlands, Japan, Taiwan, and South Korean semiconductor company not to serve the Chinese. So it is happening between them one day. But I don't think that will be really challenging for the European side. The European side is actually there will a lot of the grants and investment will be available for the developing AI because the Europe is unfortunately already behind the US and then also the Asia side. But China, even they are the far ahead than the other country except the US, they announced 4 trillion Chinese yuan actually they this week for R&D. And then so that then will be forcing for their economy to recover through the big R&D investment by corporate. There is actually the other side, tight war. To avoid tight war, they would like to move using the other of the grants and investment to boost their economy back.
Very short remark. I think in the world of things you talk about like AI, I think the preferred way is to ban simply some things, right? To ban the use of it, at least in public sphere. Just don't use DeepSeek. I think there were countries which were talking strongly about using DeepSeek for anything, essentially. So instead of increasing the price, just ban it. Right?
So we see that one president could actually start a deglobalizing trend where we, instead of sharing technologies, could be looking at some plans in the future. But anyway, so we could move a bit on. For investors, what's important, apart from the development of the global economy, is the environment of the interest rates in the world, global interest rates, maybe even regional interest rates. I would like to remark what Kim Zietlow said at the start, that basically tariff is not the tax on the company who imports, but it's actually not the company that exports, but it's paid by the company who imports, which would lead to increased inflationary pressures, not just in the US, not just in Europe, but probably all over the world, which would probably mean to higher interest rates compared to, let's say, the base scenario from 6 months ago. So how do you feel this will influence the investment environment? And maybe you could go region by region. You could take a look at America, Europe, and Asia separately.
We have seen currently that it's not the US who is benefiting from Trump tariffs or from the beginning of the trade war, but instead it's Europe. It may be surprising, but it's the case right now. When you look, for example, at the market capitalization of European mid-cap companies, so not the largest one, not the smallest one, but somewhere in the middle. So these stocks are going up quite rapidly right now, whereas the same stocks in the United States will be going down. So there is a discrepancy quite visible already now, and there are quite huge outflow of capital and money outside of the United States into Europe and into Asia, into China as well, from the international investors. So really make America great again movement right now. It's helping most German Mittelstand or companies from Germany because of the tariff threats, of course, and the United States and consumers in the United States as well have been afraid of inflation to quite extent. inflation expectations according to University of Michigan survey are the highest now in the United States amongst consumers in the United States are the highest in past 30 years since 1995. When we look at the horizon of 5 to 10 years from now, and of course this threat or this fear is shared by not just consumers, by companies as well. And companies in the United States are afraid of it or of inflationary pressures coming from tariffs or tariff war. And for them, it's something that's bad outcome for the future. And in the same way, it's a bad sign for investors of these companies. So that's a major reason why they are moving their money across the Atlantic Ocean to Europe. And in Europe, we have seen a major, but it's really a paradigm shift. What's going on right now in Germany? 2 days ago, coalition, the Grand Coalition, so meaning CDU and CSU and Social Democrats of Germany has said that they plan a really big spending boom, and it's 900 billion euros fund they put finance infrastructure and of course defense. And I think this is the major shift in German economic policy since Wiedervereinigung of 1990, because really it may change a lot in Europe, and we have seen it already in bond market where there's quite a huge decrease of yields on German bonds. The increase yesterday was the highest since the March 1990 again, so it's something historical. And when you look at the stock market in Germany, it's in very good shape right now. We have seen large increases, not just of defense companies like Rheinmetall or Hensoldt or Gensberg, but also companies from building sector, because it's not meant just for defense. This huge fund of Germany that is planned, but it's also planned for infrastructure projects. So it is a positive impulse for whole German economy, for European economy, for German companies, from German stocks. And that's a major reason why we have seen now that there is an increase in valuations of European stocks. And on the other hand, we have seen the decline, as I said before, in the United States. So there is this discrepancy, which is very interesting because it's completely opposite. It's gonna do what Mr. Trump really wished for. He wanted to make Americans great again, and now the outcome is completely different. Of course, it may be some short-term development. Now the global environment, economic, of course, has been very chaotic, but still it's very interesting development. And if it is really a paradigm shift for European economy, not just German one, we may see some other increases of valuations in the European stock market, and it may be really a game changer. So now I would be I'm still very optimistic about European stocks, because they were undervalued some weeks or some months ago, and now the picture has been completely changing, and I think we are at the end of this development. So there will be continuation of this trend. Yes, I'm not sure about United States because that's my last remark. When you look now and at the dollar has been weakening, which is again quite surprising because when Mr. Trump has introduced another set of tariffs, one would expect that it would bring another appreciation of greenback. Instead, there is the case that the greenback has been weakening. For example, Czech crown or euro has been increasing, or there's an appreciation of these currencies, these European currencies. So maybe, according, for example, Deutsche Bank, really Mr. Trump risks that to some extent dollar may lose his position globally as a kind of, or as a major safe haven. So that's the reason right now why we are seeing these declines or weakening of dollars, and not like, for example, last year when the first set of tariffs were introduced and Mr. Trump has won the elections. So now the picture is completely different. So dollar has been losing its reputation, and I think United States has been using its reputation, and because of it, the dollar is losing its reputation this way.
Yeah, I'd like to pick up on where Lukáš is just finishing all the question of the impact of tariffs. I used to work, as it was said here before, I used to work a long time at the central bank, Czech bank, and one of the basic tenets of central banking is that when you have a supply shock, you as a central bank tend not to react at all, or very, very, in a very timely way compared to demand shock. There are things for demand shocks, things are clear. For supply shocks, because supply shock, let's say negative shock, or let's say oil price goes up, tends to increase prices on the one hand, but on the other hand hurts the real economy. And so most central banks, follow actually both these things, even though officially we have inflation targeting. In fact, both these things are followed. And so the actual reaction usually is very time-made. And tariffs, which are charged on imports to US, are simply a supply shock for the US economy. So actually, in my view, it's not entirely surprising that dollar is now weakening. It's because the outlook for Fed rates is going down, and the outlook for Fed rates is going down because it was increased, as Lukáš said, based on the idea, which I think was not correct, that tariffs will increase inflation and therefore Fed will increase rates. There, I think, was misconception, and now the market finally finds out that actually this is probably not the correct story. Maybe in the short term, inflation will be high, of course, obviously, but the medium-term impact will be rather neutral, if not even negative.
Thank you. You're approaching the last minutes of discussion and the topic of this conference is investment. So I would like to ask you guys, if you're feeling this pressure of high interest rates in your markets, you like startups or venture, if it does something differently, would there come in, would there come in here by other ages, or is the market stubborn and just goes straight there?
So I will combine two questions together from you, actually. Quickest, you asking the regional difference and investment and interest rate. So you accept still the high interest rate, actually. And that there is an argument between the Federal Reserve to roll up. So there are 13 Federal Reserve in the US. But anyway, because of the high interest rate, if you read the Wall Street Journal article last week, was talking about actually high rate soaring in the Wall Street. So US actually credit is quite thin nowadays. It used to be minor, but it can be because the interest rate is high. So the rich people giving the money as a debt, not the equity investment. Debt could be for trade is quite big nowadays. and it's quite easy to access for the corporate as well. So that sector is quite big. And then last year, I met one of my alumni in the Vienna, also studying that kind of business. So Europe is following as well. But Europe interest rate is not that high, but still, this is existing. So the other source of the investment, the corporate can funding is a private equity side, not private funding, private debt side is existing as well. And then the other one is actually so that's the US market. If we're coming to the Europe, I'm following the two sentiments. Actually, the biggest Eurozone economy, Germany, as follow from the statement. Actually, German government just recently announcing a 500 billion euro for the infrastructure and R&D investment for following 10 years, 1K. And 500 more for the defense side. So 1 trillion euro for 10 years. So it's quite big. And actually, and they increase also the debt ceiling for the government side as well. So they were boosting their economy. This is a recession now. So they were boosting the economy through the a lot of the investment and government grants coming to it. So they try to drive in that direction. Biggest economy in Asia, China is same. They used to be they announcing that the economic growth rate was 4.8 expected this year. And because of tariff war, everybody said that they will go down the expectation. And this week, they announced, Chinese government announced, they were not reaching this year 5%. They increased order to this tariff war. Amazingly well. And they announced they will increase government spending for R&D to the 512 billion euro, which is the 4 trillion Chinese yuan. So they were spending a lot of the government's grants and the money investment for the sector, especially for the AI, but the ESG and many other sectors, which also competed with the US. So there will be the fundraise opportunity existing, and China, they now already putting into the China, they are putting a lot of Chinese factory or the debt facilities to the Europe and the other part of Asia to avoid the tariff war. For instance, them and Alibaba was saying that if their Chinese partner moving to the Turkey for Vietnam or Indonesia, they will funding for relocation or expense. So it's happening now, and Europe, a lot of China's already will be happy, that's be happy. Japan, Korea, with US will be happy as well because of tariff war. So there is a lot of investment and M&A to be possibly happening as well.
So let me continue talking about investments. But before that, one small remark. It's all right what you said about the German economy and the programs that are supposedly are coming, but the government is not yet in place. And all of this is just plans. And we know how careful we are in Germany about these things. So let's wait a little bit until the parliament decides this all. It's the government, the new government, that wants to do this. But of course, you're absolutely right. That's true. The bond market reaction, of course, it's real. All the other stuff is talking so far. So I can speak a little bit about investments in European startups because I usually work with my everyday life with companies that want to grow and want to expand to other markets, especially Asia. So what I see is there is, and that's what you mentioned before, there's dry powder. On the VC side and PE side, and we can still see that in the market. So startups don't get the money that they need to the extent that would like to from the VC side, but it also has a lot to do with insecurity, and on the other hand side, also with the evaluation of the startups. So when I speak to VCs in the market, they say it's just, the price for the startup, for the technology that they want to invest in is right now still too high, and they can get cheaper deals than other markets. However, on a global scale, there is this insecurity, right? And that causes this funding gap. On the other hand side, there are still pretty significant deals in the market, and Series A, VC. But what I see there is a change in the type of investors that are joining the rounds. So startup founders that have a great product, and they know that the company is is really worth investing in. They carefully choose investors more strategically. They don't just only go for the money. They like to have access to markets, access to stakeholders, access to clients, And I see that especially towards Asia. I'm working also with a VC fund from Berlin that has a dedicated Asia fund, only LPs from China and Hong Kong. They specifically invest in deep tech, seed stage companies in Europe, with the goal to bring that over to Asia. Direct partnerships, say, for scaling, and large technology companies from China also behind that. So that's attractive, and that works really well. In other spaces like consumer goods or food tech, I think a couple of other scale-ups in Germany especially that kind of got these deals, and that really opens up the market for them.
We have lost 2 minutes, so that's 30 seconds for each one of you. I would like to end the discussion with your, let's say, opinion or your ideas. What are the biggest opportunities right now from global or from European point of view, or if there are any underrated risks, or if you have any comments on what we could do much better here in Europe to move forward and catch up with the US and China in terms of AI. We can start with Lukáš and go on.
I think now in Europe is the best time to get rid of regulations. There are many that are hindering growth of our economy for many years, and now we have a big alarm bell here ringing all around us. One, the possible collapse of NATO, and second is these trade wars. So these are two developments that are of course threatening from the point of view of European economy, but at the same time, I think the challenge they are bringing about, I think maybe an opportunity to really focus from the point of view of ourselves, from the point of view of regulations, and our obstacles to our entrepreneurs and the companies related to soften this, and especially to make energies cheaper, because it's another sort of romance. It's that energies, electricity, gas is very high. Its prices compared to other regions in the world. So these two developments, I think, really can bring a needed change.
I will just mention very briefly one opportunity which sounds like opportunity, statistically speaking, and that's rearmament, especially for Czech economy, which has a rich tradition of arm industry. But so, as I say, in terms of GDP, in terms of employment, this can be a nice way to counterbalance the pressure on Czech energy-intensive industries. But of course, all these expenditures on arm equipment, art equipment, and so on are something like expenditures due to bad weather, right? It's something that we could do without, and instead of that, we could buy better hospitals, better schools, and things like this. So statistically speaking, it's can be welcome, let's say, but we still have to be aware of the fact that essentially this is just to buy protection against something that we hope would not be here. What is here?
For me, actually, the industry or sector and the country-wise, the most opportunity, I said the industry 3 sectors: generative AI, robotics might be combined by AI, so automation. And then other one is defense industry, because of Trump and dollar money, etc. So the other two is because of the paradigm change. The other one is because of Trump. Okay, for the country, Czech Republic. The reason is the logical I can explain actually, right? Actually, the German economy might invest a lot of money, right? Which country can be the best benefiting? Neighboring Czech Republic, right? You can partner with a German company to do the project together, and that one is possible as well. And then secondly, Japanese, Chinese, Korean, US company who would like to come into the Europe, very special location. Czech Republic, self-located, very hardworking people, nice people. It's already proven many companies, foreign direct investment here is successful from those countries, right? And so I think Czech Republic can be the best chance we have.
All right, so the last 30 seconds for Zietlow.
Now, I think I don't even need that. So, 3 things I would say my recommendation for companies to focus on 3 things. Number 1, profitability. Number 2, focus on your tax. And number 3, focus on markets, that are friendly with Czech Republic. Go for the low-hanging fruits to reduce risk.
The second would be, actually, the third reason why Czech Republic is best is that you have the best people and beautiful city.
Thank you.